It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition, Friday the 13th of June. And my pleasure to be here Monday through Friday on market days. And my service is a daily service as well. It's also a very comprehensive look at the markets, besides giving trades, long, shorts, whatever is appropriate based on the Chapman Wave methodology. And even more important than that is 877-927-6648 is the number to call. We just had a great show with Tom O'Brien and Daryl Martin, and Daryl will be back later on in the day. Straight after my show, you got Nico and Paige doing it's more than health. It is psychological as well as physical health and eating and dietary and exercise, etc. Just a really good show. And we started off this morning, 9 o'clock with Steve Rhodes. Fabulous show there as well. So we want to give you education here. We want to show you the different techniques that we're all using, why we're using them, how they can benefit you, and how you can learn from them in such a way that you could maybe take just one or two of the techniques that each one of us discuss and make your own potpourri of ideas that you put together with whatever you use in your own trading. So the Dow right now is up 50 at 16,784 after two triple-digit down days. It's very important that if the Dow has to show internal strength at all, it's going to be some kind of a balance today. I'm not sure it's going to last into the close. My suspicion, as I told my opening call subscribers, was that there was a good chance that if there was a rally by mid-session with the Dow up about 40 points or more and the S&P up about 6 or more, it's exactly where we are right now. There's a chance that we will close slightly higher. Yep, there's a chance that we could push all the way into Dow 16,790s, maybe even to 16,810 area. There are too many crosswinds right now. So the Dow and S&P are up. The composite up is 18 now, with Priceline making an offer for Open Table. I've never used Open Table. People who use it seem to come back time and again. So it's obviously a very good service. Otherwise, they wouldn't be interested in it. And it's a booking service for restaurants. I think it might be a grading one as well. I'm not sure. Most importantly, what we're looking at here is because you've got all three of the key indices up higher, and I'm going to include, just for the moment, let me show you. I've got the charts up here. If you're looking at Tiger TV, and this is really important. If you're looking at Tiger TV, when I start off my show, I usually have the Dow. I usually have the E-minis. Now the current one is the September contract, and trading at 1929.50. It was a very good year, up 650. And the 120-minute chart went all the way to the left side, right side price time match, almost to the 1913 area. It went to 1917 yesterday, and then started a rally. It bounced to a peak A, peak B, in a very strong leg C to the upside here. And I suspect all we're doing, I don't think this is a complete turnaround. I think that there's a chance that we're going to make a nice arch-shaped pattern. Why? There are a couple of reasons. I was out of town yesterday, and I was in New York, in Manhattan, and on the way back, I was trying to pick up on a lot of the news that I'd missed, and it just seemed to me that there was a host of bears out there just out of the... This is one of the things that's happened to the market, and one of the reasons why we get retracements so quickly is that you only get a couple of down days or one sharp down day, and all of a sudden the bears come out. I suspect this is a very important moment, because if there's a fooler to the upside today, maybe even lasting into Monday morning, all of a sudden a lot of people could be saying, oh, geez, with the takeovers and everything, we better be very careful here and lighten up on their short positions. And this is the exact moment where I think it's incumbent upon you, as we are in my Trader's Corner. This is the vehicle that I use to be able to have subscribers either buy or sell or short or whatever positions we're in, and I update that every single day. I have about 16 bullet. How many do I have today? 14 to 16 bullet points. Sometimes it's not even trades that we have, but it's a particular index or a stock that's really important for the current period. And if there are trades, I update them every day as to where the stops are, where to enter, where to add, if we're taking off a half position, where we might want to put it back, etc. So we have a mix, and this is very interesting because it seems to be working here. We have a mix of longs and shorts, and so far in each category, they're doing fine. But the day is really young. Like I always say, the day is young, right up until 5 minutes to 4, even 4 o'clock sometimes. But yeah, the day is young. Why? Because in the spectrum of the market that I look at, and that's through technical analysis, I also do fundamental analysis in the sense that I look at not numbers in this case, but I look at trends in sectors. Now, I'm going to try to do this. I'm going to try to pull up something here. Let's see if it works. I want to show you some. Oh, did I get rid of it? No, I've got it right there. I want to show you a chart. This is what I showed my subscribers this morning. Make it a little smaller. Move it over there. That's good. Make it even smaller. Look at this. This is from, I wanted to show it the other day. I didn't have time. Residential tower to joint offices in Boston skyline. 60-story Back Bay Tower will house 180 luxury condos, becoming the largest residential project yet in Surge that is changing the city's skyline. And look, that's the proposed building. There's the Prudential one. I've never liked it from the day I came here. I always thought it was just a very plain-looking building. I've never really grown into it. I love the John Hancock building, the glass building. I got pictures of it back in the 1970s when it was the world's tallest plywood building because the windows kept popping out and they had to redo all the windows. So I saw it going up, I saw it coming down, saw it going back up again. Very interesting. So look at this. All of a sudden, and it's always at particular times that the city gets very greedy, and they say, hey, we got to expand, we got to allow usage of areas we'd never used before. You can use the turnpike, over the turnpike, the air rights, all that stuff, and that's what they're doing now. So this says to me, we're getting closer and closer to a major top in the market. I don't think we're even close yet to the actual top, but we're getting closer and closer and closer. I think there's my guess is we're going to go into next year in the mega bull market. So get that out the way, and let me just finish the numbers and tell you right here that the gold is what? GCQ 14. Gold right now is up 60 cents at 12.74. Very strong leg B. Now I had spoken about this the other day. I said, it seems to me we're on the cusp. If gold did something, it would move higher. If it did something else, it would move lower. I wasn't in any position at that particular time. Still not in a position. And it's a little upsetting because there were signs based on some of the stocks that have done fabulously percentage-wise off their recent lows. So here it is, the GLD trading at 122.63. Leg B. Will it gap up on any bad news Sunday night, going into Monday? Let me explain why. There's a gap in the GLD. Unusual to have gaps like this, but it's huge. From the 124.19 low of the 23rd of May to the 123.07 high of the 27th. Gap down. Will that gap be filled, or will there be a gap away on Monday and gold in the entire week starts to move higher? And that would say that the dollar DXY, the dollar index, DXY, we'll get to call straight after this. The DXY would in fact start to pull back. It's hugging the 200 period moving average at 80.43. Right now it's at 80.65. The low today was 80.44. So I'm going to be watching this real closely. The technicals say dollar is about to pull back, and that gold in fact could move higher. Look at the 200 period moving averages. It became a beautiful support level for the GLD. Let me put this in here. There was a peak E top right there. You got a trough under the 200 period moving average. It goes peak A, peak B. What is the objective in the Chapman wave? To get you to at least a D, and it goes to an E. It goes D, and then a modest new high, recovery high at E, pulls back all the way again to the 200-period moving average. Going to be watching this real closely, because if gold starts to take off here, it's real worried about the general market. Now, just real quickly, I want you to say bonds are down 30 seconds, because to me that was a bit of a clue that if the TLT was able to get back to the 113.50 area sometime between now and next week, that'll say money will start to continue going into the safety of bonds and out of stocks. My thinking is that's a high probability, but we'll see, because if the TLT takes out 110, 109.36 will be the 200-period moving average support. It's trading at 111.85 right now. I'm going to go to Nahid in Safety Harbor. Nahid, how are you?
I'm doing well, thank you. How are you?
I'm doing well. I should say that I'm doing very well. Thank you.
Wonderful.
Yes, you'd like to look at?
Well, guess.
This is the Baidu lady. She's
yes,
back.
I would like to look at the Baidu.
Okay. So A, B, C. Oops, let me just double check that. So that's C1, C2. 179.50, 179.50. Okay. So the 120-minute chart just is making a double top at 179.50. It's trading at 178.93 right now. And the technical suggests that we are very close in Baidu to pulling back, but I haven't got a signal yet in the 120-minute chart other than to say it's a warning to be a little careful. And the daily is in leg D with a double top there as well, 179.50 in leg D. The MACD is good, but it's making the M pattern saying it's getting a little bit tired. No signal yet, but watch out if it starts to come down and cross the red moving average, which is the slow moving average, because that'll be negative, but it hasn't done that. And the stochastic's at 89%, but you can see from the chart. So what I wanted to say, folks, if you're looking at Tiger TV, what you'll be looking at right now, left side is the daily, right middle is the weekly, right side is always the monthly. That's kind of the pattern that I always keep. And what we're looking at here in the 120-minute chart is if there is a break above 180.30, that will give a kind of an M pattern to the MACD, and that'll reignite the stochastic from 73%. It could move up to 78, maybe even a little higher. But on the other hand, the pattern I'm looking at says if at any point in the next 3 days, Baidu, which has done very well by our market, this is a Chinese internet company, Baidu Inc., and at any point, if it starts to take out 174.30 to 174 support, that would suggest to me that at least on a short-term basis, there's going to be a pullback. I tell you what I want you to do. There's some music playing right now. I want you to look at the weekly chart as well, because that one is going to be the big clue as to the intermediate term. Can you hold on?
Sure.
Great. I'll be back with Nahid in a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. We're back with Nahid in Safety Harbor, Florida, and she wanted to know about Baidu, B-I-D-U, trading at 178.41, up 2.43 right now. It's been showing very good internal strength, especially the way it went in the arch formation from the left side to the right side. Didn't take out, didn't close under it, took it out, but didn't take out. One of the key metrics that I was looking at was the recent, well, fairly recent over the past year. I'm looking historically, a testing of the 140s, and it didn't take out the 141.52 low on a close, but it did go under. It went to 139. 140.66. Oh, that's interesting. 140.66 by 1 point. So it took it up by 1 point but closed above it, and now it's going all the way back to the top. So the weekly's chart is saying to me, hey, don't mess on the short side because there's strength internally. The monthly chart has still got that out. I couldn't believe it. It's still got that outstanding leg D to come. I don't want to make too many alternate wave counts in this because I really can't do that. The count says it was at a peak C and it should go above 189.34 looking out. That's not to say it has to be done now, but that's what it's saying looking out. That would be leg D, and it's in a leg D in the daily. So the daily is saying be a little careful here. There could be a pullback from 178.49. 173.05 to 170.65 are the two moving averages with most support right now. And do you have a position in it right now?
Yes, I have July call of, I believe I bought it around 160 or 162. So I sold 1/3 of my position, so now I'm wondering if I should just completely get out of it or...
Wow. You see, I tell you, let me just do this. I want to just look at the FXI for a minute. I shouldn't really do that. It's really an independent sort, but the FXI had a very nice, I was discussing this with Joe in Boston just the other day. The weekly chart of the FXI is still very strong. I'm suspicious of, now, how can I put this? I want to be as clear as possible. I don't want to be fuzzy. Yes. I'm suspicious of a market that has run out of good news and is starting to treat any news as potential, not necessarily bad news per se, but it's treating news as not good news. All news now is starting to have a negative impact over the last few days in our market. China had its big pullback going into the March low, and it seems to me there's kind of residual strength. So I'm going to treat them now as two completely separate markets just for the moment. So when I look at Baidu, I have to look at it as an independent stock doing its own thing because it completely ignored our market pullback of the last few days. A very sharp pullback, in fact, from all-time highs down quite a few hundred points in the Dow. But Baidu, in the meantime, it's just had terrific upside days. In the last 2 days, it crawled up, but it didn't break down at all. In fact, it's made higher lows. Right. Here's my thinking. I would do this. I'd be prepared to sacrifice, since it's a call position you've got. Watch it throughout the day. If Baidu, I'm doing this now based on the 120-minute chart, it had a high today of 179.50. It's trading over a point lower. Right. If Baidu gives up a little bit more today, if it goes under 178, I would suggest to you that, yeah, it's not a bad idea to take one more off. I would love, if it was possible, to keep at least one contract, because the power of the monthly and the weekly at this particular point, I think will overwhelm the daily, unless the daily slides underneath 170. That would be a big pullback. Of course, you don't want to have a call position if it's going to drop 8 points, because the premium will really shrink from that. That's why I'm recommending make a stop today, and then if over the weekend, let's say there's real bad news and the market gaps down 15 S&P points on Monday for whatever reason, because I do have a sell signal on most of the indexes. If that's the case, then Baidu will probably pull back. But because it's one of the strongest stocks, it might open closer to the closing price, today's closing price, right? Which will allow you, by the end of the day, if it's managed to move up to the 178.80 area, if it pulls back 1.5 or 2 points on Monday, that's not such a big deal. You know what I mean? Right. But if, in fact, we don't get that kind of sell-off over a Sunday night into Monday, and there's another attempt at a bounce, Baidu is right there. So I would love for you to keep one position as long as possible. That would be a kind of a core position. And the other one to squeeze out the maximum that you can. That's my thinking at this particular point. Otherwise, just take another one off and just say, you know what, now let it tell me what to do. Those are the two things that I'd consider. So I hope that helps you.
It did. Thanks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Ignitions Hour, and a couple of things we want to look at here. A couple of questions, really good questions in the den. This is the Tiger's Den. You should check it out. It's really, what a resource you've got here. Folks in the den come up with just fabulous questions, answers, statements, and right here I've got, let me go step by step. CRT, Cross Timbers Realty Trust, if you have time, okay. So CRT's right here. And I didn't have time to, I did the, let's see, I did the monthly chart. The monthly chart says, let me just do this here. In Chapman, if you look for the lowest low bar, then you merely count each successively higher peak. You expect to get to at least a peak D if it's a buy mode. Can go higher, and this one did. It went to an E right then, the monthly, and then it pulls back. I'll tell you exactly what I'm doing now for those of you who are listening and not looking. So this is what happened. From the low bar, Cross Timbers Realty Trust goes from the 13.92 low back in March of 2009. It goes peak A, peak B, peak C, peak D at 48.50 in March of 2011, and 48.45, right? That doesn't count. It has to be a higher high. So 51, round number high. Round number high. I love these round numbers. Round number high. And what does it do with that round number high? This is the high from 2011, December 2011. It plummets down to the 2360 level. It gets cut in half, 2360, 23.60. Now look what it does. It goes peak A, then recycles, dips a little bit, starts another one. Peak A, B, C, and D is in leg D right now. So it says the monthly chart is at 87% in the stochastic. The MACD is strong. Nothing wrong with this on a monthly basis, right? It's trying to recoup. Last time recouped over 50% from the top back at 64. That was down back in 2008. Plunges down to the 12s or something like that. Maybe 14 area back in 2009. And then it retraces up to the 51%, $51 area. Pulls back to 2360. Now it's at not even, it's like at 2/5, right? But the weekly chart says, the way I'm counting it, that this is actually leg C, and that means looking out. This fund, a natural gas fund, the bull marks, I don't know. Did you say it was natural gas? I think you said natural gas. Timbers. Why would it be a timber? Let's see. It's called Cross Timbers Royalty. That could just be the name of the place. So now what we're looking at, someone can just tell me what it is. Yes, gas and oil. Okay. And then the daily goes peak A, B, C, fails, then it starts again. A, B, C, D, A, B, C, D, E, and now it's going to either an F, a G, or it's a brand new buy mode in the daily at AB leg C. Very strong. So now let's look at the oil. We know is moving up. Little crisis going on. That always gets a little worried. Next thing I'm looking at is gas. Well, if you go to at NG, that's a continuous gas contract, there's a beautiful pattern that I'm looking at here that says if this is one of those Chapman wave inverted falling axe formations, then usually it's lower highs and much lower lows, and you've got an expanding wedge. In this case, it's an expanding wedge to the upside. That's usually an expanding wedge to the downside, and the result is a breakout to the upside. In this particular case, we're at the uppermost level, and it says that if there's a reversal, the break to the downside would be if natural gas goes under 4.5. Right now, it's at 4.727. And it's in leg D, and the MACD is good, not great, but good, and stochastic's not that great. And it says this week, because of the flare-up in the whole oil sector, maybe there's an implication here, but it hasn't really spiraled like crude oil has. So I'm just going to treat it as an independent source and say the weekly chart is what fascinated me. It's making this soft W pattern, which is very much like a Chapman wave inside buy signal, which says that the time frame shorter would give you a leg D to the upside, but usually it goes all the way to the top. This has only gone to the 200 period moving average resistance, and that's going to be very important. So let's put it together with UNG. UNG is the United States Natural Gas Fund. It's the fund itself, which I think is an ETN. And in this particular instance, it made the H pattern, and this could be a very positive breakout to the upside if UNG, which is trading at 26.17 down 6 cents, is able to close above, I mean weekly close above 26.88. Then it says it should retest the previous high, in this case 27.89. Where would it break down? In this case, using the weekly chart, goes to an M formation if it takes out 25, if it closes under 25.40, because then it'll probably retest the low of this week, which is 24.90. And if it does that, you've just got yourself another M formation, lowercase m formation there. I've drawn it in. That's the weekly chart. So the question is this particular stock that we were looking at, which is in fact, if I can find it now, which is, I've got to find the name of it. What was it? No, it wasn't BTE. It was CRT. CRT. Let me look at the weekly chart there. No, completely different chart pattern. Okay. Question is, what would I do? I would have to say that even though it looks a little toppy now, if you do your homework and there's no problem with it in terms of giving dividends, etc. This looks like a dividend play, and as such, what I would do is I just nibble on it. Probably I'd like to wait. Instead of 36.63, around about 36.11. So this are my comments. If you aren't in it, it's a little high risk right now, just on the daily basis. I'd probably say I'd like to buy it between it's a 36.63 CRT. I'd like to buy it between 36 35.05 and 35.77 for one position. I'd then like to buy it again at about 35.27-ish, 35.33 to 35.27, and that's all. Small position, and if that holds and it does pull back and then it starts to climb higher again, as it's moving higher, I'd add to that position, expecting that leg D will come about somewhere in the 37.80 to the 38.60 area. That'll be a nice position capital gain wise, and you'd be getting the dividend. That's the way I would trade it. Hope that helps you. Next question was platinum. No, the next question was Jay wanted to know about BTE. BTE, we've got BTE, which is Baytex Energy. Great chart. This is an A, B, C, D. This is leg E in the weekly chart. The monthly chart has really improved tremendously. And I want to go to the daily chart because that's the one when I looked at it was a little bit scary. This is in 41.35. Okay, this is A. This is leg B. I need to double check. 40.69, 40.72. Oh, I'm so pleased I did that. You know what? I'm going to take a moment on this one because this is very interesting. It's certainly extended. So if you're in it, all I can say is congratulations. It's a fantastic move that it's had. It seems to be working a little hard now. So that was an instant restart. I don't have time. I'll just circle it so that you know. And then it goes to a D, pulls back, gives a sell signal, pops up once. It does give a nice signal over here, which turns out to be a B, E/C, pulls back, holds the left side low. If you're watching me using the Chapman wave methodology, so that means it's a continuation pattern. And so this could be an E, a brand new start to a buy mode. That would be, it's either A, B. Oh, this is going to be interesting. I'm calling this F/B. Wow. It's so far, it's a very positive, beautiful chart pattern. Now, if you're not in it, I'd look at this at 44.61 BTE up 23 cents. It's real tough. You could nibble here because the monthly chart is so good, but my own way would be I need to see a pullback. Where's a 120-minute chart? Yeah, I need to see a pullback, and I'd like to nibble on it between $43.40 and $43 for one particular position, and I'd probably want to add to it at $42.70. And on all the positions I've just discussed, if it comes into that range and then it starts to rally up, that's what you want to see. If it breaks under maybe even 30 cents below the entry price, that last entry price, start to be very careful and give me a call because I need to remind myself because I don't want it to break down after that. That's going to be support level. So in this case, it would go back to the breakout candle of the weekly 9th of May where the high was 42.96. So you want to see it pull back towards the level, form kind of a magnet base over there, and then start on its merry way back up again. Consolidation more of time than price. Does look very good, but it's obviously a little extended here, having gone vertically the last couple of days. So I hope that helps you. Next question was platinum for Danny, I think it was. So Danny, I'm just going to, if you don't mind, go to my platinum continuous contract. That continuous contract says making another arch formation. It keeps wanting to come back to the 140s in the case of the continuous contract, but I can't rule out that it does have sudden pops to the upside. So you want to look at the PLN, I think it was. Let me double check PLN. That should be, let's see. Yeah, you're looking at PLN, yes. So the PLN, which is the July, has gone A to B minus over there. Pulls back, starts a brand new buy mode, goes A, B, C, D. I have no choice but to put a down arrow there, an up arrow here, and this here is just a single leg A to the upside failure pattern. Happens to be B, but it has the look the instant. It has no more than one bar rest and it continues higher. So this is going to almost certainly turn out to be a B minus if platinum takes out 1433 is the low. If it takes that out on Monday, it's going to test the left side low of 1421.40. In other words, I'm bearish on this right now. It could have another pop up, but it looks to me, based on the daily, and it looks to me based on the weekly chart, even though the continuous has gone to a D, this has gone to it's gone to a C as well. Can this make the D? Yeah, I'm just going to have to say, I think the upside is limited to 1.447, but the downside is not limited. If it takes out this week's low of 1433.20, because it's liable to then test 1421.40, last week's low, takes that out, it gives back a chunk. And the candle I'd then be looking at is the candle of the 25th of April, that weekly candle with a low of 1387. No, I can't go that. I don't want to go that far out. One step at a time. If it takes out today, if it takes out today's low of 1433.20, it's probably going to retest 1421.40. If it takes that out, you just have to look at the left side troughs. That's the way I'm looking at it. Hope that helps you. So now the next thing we're looking at is, so that's what you wanted to look at. I wanted to look at, I wrote down, I spoke about, did I actually speak about it? Yeah, that's right. The Boston, I spoke about the new skyscraper. That's just one of the many ones. Now, I needed just to talk about something that I consider to be very important. In my daily newsletter, I talk about this quintile where I've got the 120-minute Dow, which made a peak F top at 16,970. One of the reasons why I went short, even though I had alternate wave counts, daily was a G/C, the S&P was an E. There wasn't an alternate wave count. I'd considered an E. Is that so many of the indexes had gone to that particular level of D, E's, or F's that it seemed to me that even if there was a pop-up to make a leg D in the Dow, it would just be nominal, and it could be an intraday pop and drop. And therefore, we wanted to go short. So we've been shorting away this past week. We actually also have longs. And I'm not afraid. If the longs get taken out, I wouldn't be surprised if one of our longs gets taken out very soon for a little bit of a gain. It's okay. A gain is a gain. And other ones holding quite nicely, very nicely actually. But this is a really important period. Why? Because 16,601 is the 200-period exponential moving average in the daily, in the 120-minute chart. And to me, that looks like it wants to be hit at some point next week. That's number one. Number two is the reason why I said that there could be a bit of a bounce today in the market is that there was a chance that after the peak C that was made and then a leg D yesterday, we could extend that D a little bit if that D became a peak D in the VIX index 120-minute chart, as we often see in Ds, as we saw when it hit 1234 at 11:30 on the 5th of June. The VIX index, the volatility index, plunged down to 1102 in the next day or two. So that D could be quite potent as a reversal indicator. I suspect that this D is going to hold quite nicely and that we are going to go higher. And the moment we go above 1281, which is the high that we're going to be focusing on, this market is going to be pulling back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. I had a very good question in the den about the GDX Market Vectors Junior Gold Miners and the GDX itself, GDX. So what I'm looking at here is this is the Market Vectors Gold Miners ETF. GDX, the GDXJ is the juniors. And when I'm looking at this, I'm saying to myself, very powerful move from the 2193 area back on the 28th of May. 2193, I always like to type these numbers in. It goes peak A, peak B, peak C. And today is, I'm saying today's a good chance that it's peak C because the high was 2404 yesterday. Today's high is 2402. And what I'm looking at here is the speed of the move to the upside is more than just an emotional move because it's taken a couple of weeks to do that. In the weekly chart, you can see it as one powerful move above the 9-period moving average. But after a peak D that was made back on, the high was back in the week of the 14th of March of 2014, with pretty big pullback. Just based on the technicals alone, I'd say the bounce could last, and you could get yourself a leg D. I would suggest that a lot has to do with the overseas, the crisis overseas that we're looking at. If crude oil continues to push higher, then you're going to get the fear factor going to the currency of fear, which is gold, and that's how it's moving. So let me say this. If you have not bought any JDX or in any gold at all, I probably would say to you, you could start a position at 23.74. I would only start a small position. I still, from my eye says in monthly charts that this is an emotional pop-up, that there is still more downside to come, but it could be it could be a play, and I would not want you to miss out on that. So it applies to both the GDXJ and the JDX and the GDX. Trading GDX at 23.75 right now. I would prefer that it didn't take out yesterday's low of 23.46, because if it takes that out, I think it's an emotional move. It could suddenly spiral to the upside, but just in terms of chart patterns, stochastics is 79%. That's good, but by leg C it should be a little higher, and the MACD is screaming to the upside with a very wide beta. Sometimes these things fizzle because it looks more emotional than anything else. I wouldn't jump in unless you were in already. Then I'd be raising stops and just trading it that way. But I'd only nibble on this position, and I would wait. If it goes to leg D, then it's already a little late to get in. Based on the weekly chart, it seems to me that the 9-period moving average of 23.58, it's a little higher than that now. That's going to be very important over the coming week. So because there could be a move in gold, the XAU's moving up nicely. XAU, same thing, also leg C. I cannot deny that this is a bigger bounce than I thought and a quicker bounce than I thought. Therefore, I'm going to suggest, yes, take a little position. I don't know if I can say more than that, at least from my perspective at this particular point. So I hope that helps. And it would even be better to find a smaller, less expensive gold stock that's participating in the same way. Just use that as, you don't have to, use as much money then, and it's the same position and probably even a better percentage gain. So let me just do this because we're about to wrap up. You've got a great program coming up right now, and I want to do this. So the Dow is trading at 16,767. 16,800 is very strong resistance. If there is a break above that in the next 2 days, then we're going to be watching the 16,850 area for a U-shaped turnaround. I didn't change this. This is actually a G, not a C. Now, the other thing that I'm looking at that's very important is the Volatility Index. Until the VIX Index is able to consistently make, in the daily chart, higher highs and higher lows, I think there's a good chance now that it's going to do that. Then you're not going to go down all that deeply. The IWM is acting quite well in relation to everything else, and that's what I was talking about a little earlier, that it's kind of a mixed market right now. The Qs are also holding up a little bit better, but in fact, I think we're making a turn in the market. It might be selective. I'd be very hesitant to be overly long.
David White's newsletter, The Technology